Is your weekly TA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week and what does it tell us about the coming one. I do this show once a week every Sunday night, live here at 9 o'clock Eastern Time on the base of the Rocky Mountains. It was a interesting week last week. If you want to draw an X through it, you can. It was a big down week, in particular NASDAQ, and more so on the Russell, right? The Russell led the way down. NASDAQ tried to follow. These, remember, were the weakest two on the way up. So from a weekly perspective, you still had the strong ones that have been strong all year, right, comparatively, holding up pretty well. And then the weaker two pushing down on the downside. NDX isn't on this list, but the NDX actually held in pretty good too, which also has been a strong one. So it's the same story we've seen before. Remember, before we got that big push up in the NASDAQ and we started to push higher on the Russell, before then it was all about the S&P 500 holding at the highs and refusing to break down. And then the S&P broke out. Suspect breakout. I'm here on a daily right now. That leads to the run, right? Late May leads to the run through the end of the quarter. And then you get the pullback last week after the quarter's over into earnings. If you look at it here on the weekly, there's that run up, right? Tried to break down at one point in April. It was really, other than the February lows, it really was the only spike down, so to speak, but you had a takeaway bar. The very next bar consolidates for a month, takes off. Now you get a little volume off the top, but you know, last week or the week before actually was a shortened week, so there's really not much in the way of volume. And if we pop back over to the daily, you know, the test now is this high. That on the S&P, that's the test. Can you get back over that high? Because if you do, you know, then the highs are in play one more time. What's that number? If you look at it, it's 1976.39. So that's really the number on the upside. On the downside, you really got the support zone up underneath here. So that low last week would become a critical point. That prior high, that anchors that support zone. So you got three of them all anchored right here together now. And now you've got enough support on this because most of the heavy volume stuff has fallen off at this point. So on a 3-month view, this is the zone. You know, you'd have to break a swing point low to really get anything going on this time frame. Now, if we go over to the Russell, so we're taking the extreme strong against the extreme weak, the Russell broke already. So that swing point low it broke was from June 25th, gets up underneath it, changes trend, does it on volume, gets an inside day on Friday. The Russell, unlike the S&P, you know, the Russell has resistance right above now on the break of that swing point low. Now if it comes back within 6 bars, you know that the odds are it can make it up. You know, the odds are pretty good. They can make it up to the top of that bar on that retest region, which is this area. That's about 1183 on the upside. So if we look at the top of that bar, 1182 3/4. So that's the measure on the way back up. If it can't get over that, then what do? Well, you've created an ABCD structure to the downside off this bar on the daily. So here's the bounce. Whatever the bounce takes it to, say it goes all the way back up, then your ABCD structure would bring you back down towards the lows. That's on the daily. If you look over on the weekly, so if we pop over on the Russell on the weekly, the big move here came off the test of the highs, and I'd referred to this possibility before. The test of the highs in the old classical perspective, that is in fact a double top, potential double top, because you had enough time in between. You actually had more volume on this side than you did on that. right? All of those things are what Edwards and McGee calls a double top. Now, the press off didn't have extremely high volume at all, and you're coming into a support zone, right, that has some, decent volume there. So, from this perspective, a bounce here would make sense. Get some sort of a bounce back up. Here on the weekly, you can see the low of this bar, that top, that's 1164. If we pop back over to the daily, that 1164, this number was 1182. The bottom of it's 1168. So that 1164.68 on the weekly is there. It's just right above where we are. And then, then it's back up at the tops again on a weekly perspective if it gets back over. So I think if you're trying to measure the Russell, you got to measure it here on the daily chart and on the retest regenerate, because that's going to be the key. Remember, back when we had all the weakness over here and the Russell kept trying to break down on an intermediate term time frame and came very close about 3 times, it was off of ABCD structures to the downside and retest regenerates that just kept regenerating lower. So if you're looking for more pressure to come in these markets, it looks like it's going to be the Russell giving it to us again, and so that's the one to watch from a weakness perspective. Dow Jones, really nothing there. If we look at the NDX is coming right back up to the top. This will be the first one. This is the strongest one right now. This will be the first one to test that area. That's the breakdown bar on this past week. 3906.22. We're at 3904.58. It's going to attack it tomorrow, so we're going to find out right away, is this one going to go back to the tops? And so, from the strength perspective, it's the NDX. From the weakness perspective, it's the Russell. That's where the tests are going to be. Now, the Russell was the first index to break down. If you go over and you look at the sectors, we actually had another sector break last week on the daily charts. And so if we pop up the XLE, this one was threatening to break down for a while. It did finally break down. It is suspect. So retest regen here, same sort of idea now. Now that you finally got a break, the retest regen is going to be there. If it comes back within 6 bars, and there's a decent chance that that will happen, then that would be the test, the top of that swing point lows high right at 100. So that's going to be the number on the way back up. But that is the second, well, I should say the third index, because we actually have 2 other ones. One that had broken quite a while ago that now broke on Thursday, also the second time, I should say, making it a confirmed bearish trend, first index, first sector to go to that trend. ABCD structures down, finished off another one, it's getting this bounce. This would be the sector I would keep watching from the perspective of weakness. The other one that is broken, XLU, that one is broken, made it into a range trade. So you got 3 sectors and now an index, trend transitioning to a lower trend. 2 to 3 sectors start to transition, typically the rest of them tend to follow. I would expect that there's a decent chance that we're going to try to bounce this market to start with, because we still have strength in other areas. In particular, the NDX, which you see here on the XLK, that will be a test. And then we actually have still strength in the SOX, in the IYT, and to some degree still in the XLF, although the XLF is really a test of wills now. Tried to break the swing point low, didn't have the volume. That's also bouncing. It kind of looks more like a range trade at this point. And almost all the others look the same way. XLY actually showed some decent strength, did a retest, and is trying to regenerate higher, though it had some volume on the retest. So sector-wise, if you look at any of these on the weeklies, they still look okay. Matter of fact, let's look at the weakest ones on the weekly. Here's the weekly on the XLE. So you see it's pulling back, but it had made, a tremendous run, so the pullback here isn't major. Here's the XLI on the weekly. You can see it just, coming down reluctantly on the way back down. Doesn't want to give it up. And then the XLU on the weekly, this one definitely looks more like a range trade at this point. So weeklies, they don't look that bad. Dailies, you've got some damage finally. Nothing, nothing to where you have to think that the market's going to, roll over and die, but it certainly is beginning to show susceptibility to sellers, which for the last 7 weeks has been non-existent. If we look over at the OX markets and we look to see what's happening there, over there you've got a little bit different scenario. I'm looking at the currencies first. The euro came down, and this is what Draghi and the ECB wants. Sideways here, euro still looks to me like it's going to try to test this low before it even tries to make an attempt to go higher. The range bar still is that big bar. You had a little bit underneath, a little bit over it. Now you're coming back to try to test the lows. If you get under this particular low, then that opens up these lows down here. And so euro looks to me like it's going to continue to try to work lower. If the euro works lower, that typically puts upside on the dollar, the UUP. Dollar is actually looking as if it's trying to build up an ABCD structure up. Why do I look at the currencies? What does that mean? Well, a stronger dollar typically is not good for equities over time. It's not as if it can't coexist with stronger equities, but in this environment, I suspect it won't. So that's probably going to be a negative. A stronger dollar usually means weaker gold. If we look at the gold market, though, the gold market still doesn't want to give anything up. And as a matter of fact, it looks as if it's going to try to do an ABCD structure to the upside. That structure is from here down and back up. And you can see that that structure measures a long way to the upside. So gold, typically a safe haven. We have the exogenous events taking place in Israel. We had the Portuguese scare again this week. I think it was Wednesday or Tuesday or Wednesday. I think it was Tuesday actually, where you had, or maybe it was later in the week, you had the banks, the notes going bad. They couldn't pay their paper, their loans. So, gold benefiting from some of the contagion worries now in the financial markets, and I'm sure it's benefiting to some degree from what's taking place now with Israel and Palestine, the Palestinian situation where, Israel just goes in and does what it needs to do in its mind, which is to wipe out whatever it has to take out the rockets that are being fired at them. And I don't know what that resolution is ever going to look like. I remember as a kid asking my dad, what's going to happen? He says, well, they're going to fight, the rest of my life and probably the rest of yours. I guess that's the way it is. It's kind of sad, but it's kind of the scenario. So anyway, those two things I think are helping the gold market right now. Bonds, if you look at bonds, so a little bit of a safety flight there. Also a little bit of a safety flight here on the bonds as they come back up to test those highs. And so bonds also doing the same thing. And as you can tell from the oil market, it's not Iraq anymore. That premium that was built in off of Iraq, total collapse. This thing just takes the premium all the way back out. That's about an 8% collapse over the last 2 weeks. Oil market now reflecting more of the supply and demand instead of the speculation and fear. So that's it. I think that's probably the main things. Oh, one other thing to look at here is the emerging markets. They're still holding here at the highs, still looking pretty good overall. If we go overseas though, this is where we can go and look at Europe. This is where there's some serious problems again in the European Union. France finishes off an ABCD structure. If you look at it on the weekly, it actually broke on multiple time frames. Yeah, they can get a bounce. You know, the higher range is up in here. That bounce can take it back up to that area because here's that swing point low that would be the retest regen. But this looks like, you know, it's going to do more work to the downside. You have three ranges. I would be very surprised if we don't see it over the next week or two down here trying to test that lower end of that middle range. So that's the CACs, which in my opinion is the weakest of the European markets. DAX probably being the strongest of the markets, although the FTSE's been doing pretty good lately. DAX, same sort of situation. So you got a retest regen going. Right now it's done the full retest, has less volume. That suggests it's going to bounce, but what is it going to bounce back into? Well, you got a retest regen here, and you got another range up there. So the test, more than likely, is going to be in this region. That looks to be where the test is coming back to, and I suspect, given the problems in France, it's not going to be able to do much more than that at this particular point in time. So some sort of a bounce and then some sort of a continuation of testing, at least on the German DAX, and potentially even trading lower. FTSE also makes new lows. That's on the daily. Here's the weekly. Holding the higher range. You can look at it from this perspective. There's a range there. You've got another range up underneath. It's testing that area right now. More than likely gets a little bounce along with everything else, but it's probably going to come right back down there and test it again. So all three of the European major markets struggling at this point, despite all the noise about ECB doing whatever it takes. Over in Hong Kong, here's the Hang Seng. Hang Seng drifts back down. This one actually has ranges too, so many of them are starting to set up these ranges that are quite visible. You got a range here, you got a range up underneath, and then you got another one up underneath that. It's in the middle one. It will probably try to test back to the top side, but that breakdown bar came on some volume, so I suspect between that and this bar, Hong Kong is going to be range bound as well. And if we look at the China H shares that trade in Hong Kong, you kind of had the same sort of thing happen here. Range up here, range up underneath, got into the lower ones, trying to get back up there. This breakdown bar also, just like we saw in Hong Kong, and this high, those are probably going to be the resistance on the way back up. So this little area in here is where the resistance is going to show. So I would think that's where you trade to and you have trouble. If you look over at the rest of these indexes, in Asia at least, looking still reasonably well. Taiwan comes off on the daily. Looks like a 2-bar reversal actually on the weekly, so probably going to get some range trade at best out of Taiwan now. The N225, the Nikkei, comes off, but you know, holds pretty well. This also, you know, they're all set up the same way in terms of the ranges. You got a range here, one up underneath, and then a lower one. It's still in the second one. That's where most of them in Asia are now. It's going to try to test back into the top one, and we'll see if it can get any higher, but I suspect this area is going to kill it. So you get up to the middle of the top range, and then you probably come back down and test some more. As long as they hold these top two ranges, you know, these various Asian indexes, if they hold up into that area, up in this area, then they're probably going to be okay, and they're eventually going to try to trade higher. But the question is what are we going to see in Europe in particular, and what kind of a bleed does that have on the American markets? That will be what affects Asia for the most part, I suspect. Okay, so that, I think that's a decent wrap of what's out there and what's happening. Yeah, I think that's a good read. So I got a, it looks like a question mark up here from Tommy. LA, will you talk a bit about the WFC earnings, reflecting on the upcoming big bank earnings and sell the news? The stock tested the swing point low on expanding volume. So let's pop over, let me throw the chart in and pull it up. So if I put up Wells Fargo here, so Wells Fargo had earnings Friday morning, and even though it was able, I believe if I remember correctly, even though it was able to hit the earnings, there was some trepidation about upcoming earnings and some issues with their margins and not being able to potentially hit those earnings. And then the other piece of it was they barely just made their numbers. They really didn't get the expansion in some of the places that the street was expecting them to. So what Tommy's talking about is, if you look here on this chart, you had expanding volume here into that swing point low, right? No contest, and on earnings you're not going to have a contest. So the fact that you expanded volume all the way down says that you're going to come right back and test it again. So if you look at that, right, it tested into it. As a matter of fact, I'm pretty sure it got underneath it, back over it. 50.94 got to 50.82. So you come underneath it, you get back over it, you stay over it, but just barely. It's going to come back, it's going to attack it, it's probably going to trade lower back to what? This area that it never has retested and regenerated off of, which is back here. The first trip back to this area should be a buy, almost certainly. And if it comes back immediately, it almost certainly will be a buy, right? Because you'll have a serious extension to the downside immediately if that's what happens. The only reason this held the swing point low is that is support, and you'd already had an extension down into the earnings. So you had 5 straight bars down, and then the earnings bar, or actually 4 bars down and then the earnings bar. So that's, to me, that is why you saw the bounce on Friday. But given the setup, this is going to come back. It's going to test again. And before I go to the other stocks, let's look at the weekly. On the low here, you got the 95,497. You got 96. So you come into that low. You don't have as, you have slightly more volume, but it's not, it's not a huge difference. And you're coming back into swing point high. That is 1, 2, 3, 4, 5, 6. So it's after 6 bars as well. That high was 50.49. You only got the 50.82. So just like we were just looking at on the daily, you're going to have the same setup on the weekly. That's probably going to be a buy on the first retest of that zone. The top, bottom of that one, 50.49 down to around 49.46. Now going back to the daily, 50.49 and 40.90. So you can see that's the same area. It's going to come into the exact same area. The weekly is going to start up in this area here. Daily is going to be there. That makes it a very, if I'm looking at this from a buying perspective, that looks like a very enticing place to try to buy. That's Wells Fargo. Now, what does it mean for the rest of the sector? Because you have Citigroup earnings, Jpmorgan, Goldman Sachs, some other broker dealers, all of those this week. So that's going to be a good read. So let's go back and look at the XLF. And so if I pull the XLF up and we look at it, we came down on Thursday, tested 258 into 267 into 336. So you don't have the volume on the first test down. If you look at it on the weekly, you're coming back into this swing point high that was broken. You've already tested it multiple times. So this isn't a clean retest regen. This is a continuation retest regenerate on the weekly. And that bottom, which it certainly can get to, is down there on the low, and that price point 21.96. So you could certainly see, look at your volumes here compared to what you had back there. You could certainly see a test all the way down to that area. What's going to happen on the earnings? Well, I think Citigroup is probably the weakest of the groups. So I suspect Citigroup's going to have a hard time pressing the numbers higher. As a matter of fact, instead of just assuming that, let's look at the ones that are going to report and get a read on what they look like. So Citibank, Citigroup, JPM, Goldman Sachs, those are the major three. So let's pop them up real quick and look at them while I have a few more minutes. Citigroup, this one's already sold off. So, it's already done. It's already under 2 swing point lows, weekly hanging at the lows. This one's probably not going to get hurt on earnings unless it's just horrible, because it hasn't gone anywhere. So Citigroup's not going to help and probably not going to hurt. Goldman Sachs. Goldman Sachs is already in a sideways trend. It's already broken a swing point low. It's doing the retest regen now. And at the same time, kind of interesting, this one's actually doing 2 retest regens. It's back up doing a retest regenerate bearish. That's the bearish one. The bullish one was here. So it came into way after 6 bars. And as I always say, they're almost guaranteed to be a buy on that first trip back after 6 bars. And you can see there's the bounce. Problem is now it has a retest regenerate back into this zone. And it's a bearish one. So that bearish zone now is what it's coming back into as it's doing its earnings. So that's going to be the test on the way back. So if I'm looking at these markets, and Goldman in particular, that's the critical bar right there. So your top of the breakdown bar, 166.78, which is the retest regenerate. If it can't regenerate, if it can't break higher, it's going to regenerate lower. That too would set up an ABCD structure on the downside. Assuming it gets all the way back up there, that would bring it down these next lows. So Goldman's a question mark because it successfully regenerated, and now it's trying to regenerate on a bearish move. Last one, Jpmorgan, and has the same setup. Well, slightly different, but the same sort of scenario on the bearish. Here's the break. That's the retest regenerate. It's already 3 bars past it. I believe they report on Tuesday, if I remember right, Tuesday or Wednesday. So that will probably be within 6 bars. That gets it back to the top. It's amazing how these things always end up. These 2 bars are the 2 critical bars on the way back. One's at the bottom, one's at the top of the regenerate zone, the bearish regenerate zone. That will be the key area there. The financials still can go either way, but if I just look one more time at the sector, looks like the sector probably is going to test those lows again. It came down there, hit them pretty good, probably going to come back and test them one more time. And if they break, it's 2 of them. It's going to get multiple swing points, going to bring it down at least into these highs, at least back to 22 probably. So if you ask me what I think the banks are going to do, the banks are going to struggle, more than likely. All right, I'm about out of time here. I'm going to leave it at that. As always, I thank you for joining me. Have a great night. Take care of yourself, and I'll see you tomorrow. We'll do it all again from the Daily Perspective. I'm LA. This is, and it was, your weekly TA wrap. Have yourself a great night. Take care. Until next time. Good night, folks.